Tell us about this deal. Tell us the nuts and bolts of this. Who wins, who loses?
The nuts and bolts of it is that Charter finally got what they wanted, which is Time Warner Cable. After, Betty Lou pointed out 2 years, they did have to pay up for it, but I think they're happy to pay up for the scale that Time Warner Cable brings to the table. So certainly this makes them the second largest cable company in the U.S. and probably the third largest video provider, right? If you assume DirecTV and AT&T close.
So what happens to the other cable operators now? Is it game on with consolidation?
I think you're right. I think it is game on with consolidation. I think you're still early on in terms of consolidation in the industry. There are other companies like privately held Cox and Mediacom, and obviously Cablevision, which sits here in New York. I think the market is wondering what happens to the Dolan family and how they think about Cablevision.
Well, there were rumors that maybe they might be interested in Time Warner Cable, right?
Certainly, and I think with Altice coming in, a French cable company coming in and becoming a new buyer of cable assets in the U.S. industry, that changes everything.
If I'm a Time Warner shareholder today, how do I feel?
I think you would applaud, right? The stock is up 5–6%. I think initially people were assuming the deal would come in at 180, so certainly 195 is 10% higher than what a lot of people were expecting.
Okay, talk to me about John Malone. You see him doing a lot of stuff in Europe. 15 years ago, he was more or less the person people were talking to about cable in this country, and then 15 years later, he just double backs. He would not give up. You said he wanted this deal.
Yes, he's the vision behind this deal. I mean, he is the cable cowboy. He founded the U.S. industry, right? The U.S. cable industry. So for him to make this return is a big deal.
It is a huge deal. Do you think that he's going to have to lend some money to this deal?
I think this morning he did. I think he paid a pretty big paycheck to get to get Charter and Time Warner Cable together through Liberty Broadband and Liberty Interactive.
Did he pay too much?
I think he takes a very long-term view, and I think it's rare that John Malone would pay too much for anything.
He is a cheapskate.
This is one of those things. The reason that the other deal blew up with Comcast was because there are regulatory concerns. Should that be taken for granted in this deal as well? I
think you cannot take regulation or regulatory approval for granted anymore, particularly because broadband is just so important to the U.S. consumer.
Sure.
This is a very different deal. I think there are no hard caps in the U.S., but certainly Comcast, Time Warner Cable, that hit kind of 57% of broadband share. This is somewhat shy of 30%, so a very different deal.
So are they going to have to give up? Is Charter going to have to give up any assets then, or are we going to see some sales in order to make this deal happen?
I think it would be surprising for investors to see divestitures, but we don't know what kind of conditions there could be on the regulatory approval process.
What is this going to mean for consumers?
Consumers have a pretty negative view on their cable company,
yes, they do.
At the end of the day,
that's an understatement.
Yeah, this will be a positive for consumers, right? Because I think Charter has done a really good job at turning around the video business and providing faster speeds to consumers. I think they'll do a similar playbook once they get Time Warner Cable, and Time Warner Cable's been, so much of the focus has been on operations these days.
Speaking of operations, I mean, give me the history of how Charter has been able to integrate companies into its fold. I mean, are we going to see a pretty seamless transition here, or are there going to be some hiccups?
I think outside of regulation, integration is always the second biggest risk for these M&A deals. I would just highlight that Charter bought Bresnan a few years ago. They pretty much integrated that asset within 12 months and were able to get some pretty good synergies here. And over the last 12 to 14 months, because of Comcast, Charter has been very vocal and working together with Time Warner Cable and that management team to tee up Greatland Communication, which was once part of the proposed Comcast Time Warner Cable deal.
We have a little less than a minute left. I just wanted to ask you about Liberty's involvement of this. Are they going to have a hand in any of this?
I think so. John Malone has a very strategic vision for the industry. He also owns media assets that I would point out, like Discovery, Stars, and Lionsgate now, so certainly.
But, I mean, it's just interesting, 12 months and we're back here again with Charter buying Time Warner Cable. I mean, if you were a Time Warner Cable shareholder, you're happy today, but you kind of went through 12 months of, huge uncertainty and kind of, a little bit of stomach aches, I think, right?
Definitely, but you got a knockout bid. You got a knockout bid from Charter this morning.
It's a good payoff.